Okay, so if you've seen the latest housing numbers, you might be thinking things look bad, like really bad. It honestly looks like the market just slammed into a brick wall. But what if the real story has nothing to do with the economy? Today, we're going to dig into this sudden, pretty confusing drop in the data and find out what's actually happening. Let's get into it. Right? This is the question that pops into everyone's head when the headlines start flashing red. I mean, the year was off to a pretty decent start, and then all of a sudden, the data just takes a complete nosedive. So, is it time to worry? Is this the beginning of a major downturn? And here it is. This is the number that just stopped everybody in their tracks. A 14% drop in mortgage applications in a single week. A number like that, it usually screams that something is fundamentally broken in the market. But, we gotta look a little closer. So yeah, this wasn't just one rogue data point. Nope, it was a whole bunch of them, all pointing down, all at the same time. It really, truly looked like the entire market just froze solid. And you can see it all right here. Housing inventory went down, new listings fell, pending sales dropped, and of course, those purchase applications that just fell off a cliff. This whole combo of bad news, this is exactly what you think the start of a housing recession looks like. And that's the key word right there, normally. A 14% drop in applications is the kind of thing you'd expect to see if mortgage rates suddenly shot up by, say, 0.75%. It's a real panic signal. But here's the thing. That didn't happen, not even a little bit. And that brings us to what's really going on. This wasn't an economic blizzard we were seeing, it was a literal one. The bad guy here wasn't financial, it was meteorological. What's so interesting is this quote from the analyst who tracks this stuff. They were actually watching for this. They knew this massive storm had blanketed a huge part of the country and were kind of surprised it didn't mess up the data sooner. But this week, oh yeah, it finally showed up and it hit with a vengeance. And this just says it all perfectly. Just think about it for a second. You can't list your house, you can't go to an open house, and you for sure can't get the paperwork done to close a sale when you're buried in snow. The whole real estate machine was just put on ice. So, what happens if we look at all those scary numbers again, but this time we put on our snowstorm glasses? Well, a totally different picture of the market's real health starts to take shape. All right, let's start with the number of homes actually for sale. This time of year, we'd expect that number to be growing, but instead, it went the other way. Check it out, inventory actually fell by more than 8,500 homes. A drop like that this time of year is really weird, but it lines up perfectly with a week where sellers were probably snowed in and just couldn't get their properties listed. Okay, so that's total inventory, but what about the pipeline of brand new listings hitting the market? Let's take a look at that. The year-over-year numbers here tell a really clear story. Just look at that difference. Nearly 54,000 new listings this same week last year, compared to just over 48,000 during the storm week this year. It's a crystal clear sign that sellers just hit the pause button. So sellers couldn't list their homes. Okay, that makes sense. But what about the buyers who are already out there about to sign on the dotted line? How did the storm affect deals that were already in the works? Well, it's the exact same story. Pending sales, so these are homes that are under contract but haven't officially closed yet, they also dropped compared to last year. And again, it's just basic logistics. Buyers, agents, inspectors, nobody could get out to finalize these deals, so everything got put on hold. Okay, so all this activity just froze up. Now we have to look at the one crucial thing that didn't change. This is our anchor in the storm, the one piece of data that tells us the market's foundation is actually still pretty solid. Let's just circle right back to this, because this is the whole case, right here. The effect, that crazy 14% drop, was totally real. But the cause wasn't economic. Mortgage rates were steady, which points us directly back to one culprit, the snow. And here's all the proof you need. Just look at how stable rates have been. They're sitting right around 6.2%, totally comfortable inside the forecasted range for the year. There was no big spike, no panic in the markets, absolutely no economic reason for that huge drop in activity. So why have rates been so calm lately? Well, it's because of this thing called mortgage spreads. The easiest way to think about it is it's like a risk fee that lenders add on top of the base interest rate. And when that fee is normal and stable, mortgage rates are stable too. And wow, this chart just perfectly illustrates what a good story this is. That bar on the left, that's where rates are today, around 6.25%. The bar on the right, that's where they would be if we still had those crazy panicked high spreads from 2023. we'd be looking at rates over 7.4%. The fact that these spreads are back to normal is a huge, huge stabilizing force for the market right now. All right, so the market isn't falling apart, it was just snowed in. So what does that mean as we start heading into the spring season? How should we be looking at the data from here on out? Here's the most important thing to remember. Don't let a blizzard make you forget about the overall climate. The main driver of the housing market, ever since last summer, has been mortgage rates holding pretty steady in that 6% range. And guess what? That driver is still completely there. So here's your game plan for the next few months. First, just expect the data to be kind of messy for another month or two while the storm's impact fully cycles through. Second, keep a close eye on the big reports, like the jobs numbers and existing home sales, to get a clearer picture. And third, the general expectation is that once all this noise fades away, the market is going to get right back on track for a normal spring. So there you have it. We've kind of solved the mystery. That dramatic plunge in the numbers wasn't a signal of economic disaster. It was just a market put on a temporary timeout by Mother Nature. This actually tells us the housing market is maybe more resilient than we thought. But it leaves us with a brand new question. With stable rates and all this demand that was frozen in place, just how strong is the spring thaw going to be for housing? Now that's what we'll be watching next.